you look at it historically, in fact, we were just talking about downside risk before this call. You go back and the last rally in 2018 got to 27,000, and next time it was at 3. So if historical performance is any guide, there's a lot of risk there. But I think that the market is beginning to become more mature. And I think any nascent market, you get that kind of volatility and those kind of risks that are associated with it. I think the key to creating some type of stability in the market is to see an increase in the participation of institutional investors. Right now, they're small. There's about $700 billion of money in Bitcoin right now. Of that, roughly 1% of it's institutional money.
Do you know how to value this? Because I know you know how to value a barrel of oil. I know you know how to value iron ore. Right, if you get it right or wrong, you know what your methodology is. What about your methodology for a cryptocurrency and for Bitcoin? Do you actually know how to get an accurate valuation on this?
So if you treat it like a defensive asset, such that let's say like gold, and we look at the size of defensive assets like the gold market, there is like $2 trillion, $3 trillion in those kind of markets. Now we start to ask how much of this defensive money could be allocated to something like a cryptocurrency or a Bitcoin. Right now, all the cryptocurrencies have about $1 trillion. Let's say it grows to $2 trillion. Then you just do the simple math. How many coins are out there? Divide it by that, and you can end up with a fair value. Now, the question is, that can give you some long-run equilibrium, but the flows that you're referring to create a lot of volatility and a lot of uncertainty that makes it very difficult to forecast it.
Do you have a recommendation on it at the moment?
Given the fact that you've seen a big run up across all of these markets, I'm not going to take a strong view here, but this morning, the traffic seems to be flowing one direction.